for joining. Good morning. Hello, can you guys hear me? Can you hear me, Mike?
Hello, hello, good morning.
Good morning. Good morning. Good morning.
Can you hear me? Oh, she's
You're
echoing. Oh,
There you go, that's better. Not sure what was happening there. Morning, Angie.
Good morning. How are you?
Good, thank you.
How are you?
I see Angie. I see you in here twice.
Yeah, there's a Drew
Yeah.
and then there's an Angie.
Okay. Drew's my husband, so he.
Okay, Drew's
How do
my
I
husband.
delete?
Okay, Drew's
How do
my
I?
husband. Okay, Drew's my husband.
There's a great feedback too.
Yeah, I think the devices might be close to each other.
Yeah.
The two devices that are both logged in.
I only have one device on.
I only have one device on.
Okay,
There you
Angie.
go.
Yeah.
That should be better.
Yeah.
Okay. Now where
Yeah,
do
there
I
you
find you? I can't see you now.
Oh, that's so strange.
There we go. Okay, I had it started twice.
Okay.
Okay, awesome. Thanks, Angie. Thanks for being here with us.
Oh,
The
thank you
call
for
is
having me.
recorded, so we will be sharing it with our group and our team later on.
Okay.
So Angie and I connected, just to kind of give a quick intro. Angie and I connected through a mutual friend that does financial services. So her and I, we've talked on different occasions together, you know, for first-time home buyers, for investors, how to get in the market. And I believe by the third time I was participating in that event with Angie, I realized that, you know, there's some really cool products that they have. I like her energy, her professionalism as well. She's servicing a couple of clients and looking into, you know, some products and how she could better serve them as well. So she's handling a couple of clients for me at the moment. But I wanted to, and I spoke to another member of her team, and I just really liked the diversity of the products that they had for pre-construction, for first-time home buyers, and I also believe they were, you know, bringing an opportunity where you could, you know, close and have products be appraised on the appraised value, which is really good for investors. So I said, you know what, let's get a call together, let's get a team call together. So without further ado, Angie, I'm going to leave it up to you. Don't feel rushed for time. So it's not going to be like Daniel's calls where we have 10 minutes to talk. So you have more than enough time, 30 minutes, 45 minutes, whatever you need. And we will hopefully do another session sometime at another part down the road in the middle of the year. So without further ado, Angie, it's all to you.
Okay. Thank you. Thank you for having me. I'm going to share my screen. And please let me know if you can see my screen.
Yeah, we can see it.
Perfect. So, yeah, my goal is to be a support to your business. We both deal with home buyers at a different process for each of us, but we do work together. So that's exactly what I'm looking to do with you guys. So I have a few things to talk about today about first-time home buyers and the new builds, and then how I can support you. With me today I think my boss may be joining us if she's able to. I know she has back-to-back meetings, but she may pop in. Her name is Samira, and she's the VP of Mortgage Specialists in Southwestern Ontario. I am a mortgage specialist and I am mobile. So what that means is that I can work all across Canada. And I also have the freedom to work in my home. I've been with BMO Bank of Montreal now for over 4 years already. And I've been in the industry for 12 years. So the perks from working from my home is that I can work whenever I like. I work the normal 9 to 5, but if I also have a customer that I need to have a phone call with because they work during the day, I can call them in the evenings. If there's a rush offer that came in and they need me to quickly put together an approval, I can do that over the weekend. So I do make my own schedule. And then when a customer is ready to close, they just go to a branch that's convenient for them. So that enables me to work anywhere in Canada. So personally, I am a mom. I have 2 daughters that are 9 and 11. Being home the last 2 years has been very, very helpful because they've been here. Well, 4 times now, I guess they've been here. They've been great. They are so easy to deal with. They're independent. So it's been great to have them at home sometimes. And I have a husband and a dog and we live in the country actually. So and I enjoy like working out, being outside, stuff like that. So, all right. So first-time home buyers. I think that knowledge is key. It's the most important thing for the buyers and for my relationship with you. So I want to know what you expect, what your, how much feedback you want, how you want to work so that we can build this successful partnership. So if we have more one-on-one time, I can learn about you, what you're expecting. I found some realtors want constant contact, some don't want any at all. So I want to work with you. I tend to follow up if there's any problems, any issues I see, and once I have the approval, and if I need any paperwork of any sort. Those are the times that I know I need to come and talk to you, but yeah, I want to work with you to see what you want. As far as buyers, educating, letting them know what the process is, letting them know what to expect is very important, such as letting them know that they are to expect to be able to come up with enough funds to pay for the legal fees. That's a big portion that they need to know about. Now, fully qualified pre-approvals. Not every bank or broker does fully qualified pre-approvals. So we do. I will look at their income. I'm getting everything I would for an actual approval. But because we don't have that property address, it's called a pre-approval. So that gives you a little bit more confidence in our numbers. We're not just giving you a rate hold, which is very important. So we're not wasting your time or your buyer's time not knowing their pre-approved amount. Yeah, nobody wants to be wasting time. Now, I do have, for my first-time home buyers, a PDF with closing tips, and it looks like this. All right, so it's just a nice little handout. People like to take paper home with them, or since we haven't been doing a lot of in-person meetings, I can send this to them, and it just lets them know even more what to expect. With our mortgages, we have a take a break option or a skip a payment option that you're allowed to do once per year if you need to. You're also allowed to prepay up to 20% per year on our regular mortgages, which is one of the higher amounts when it comes to the banks and brokers. And then there's just some tips that you should try to remember to do. Nice to be able to see this. So for them to help. Next is our new build program. So we do have a capped rate mortgage that can be held up to 36 months. Now that is for new construction that closes after our standard rate hold of 130 days. So it's very important to have that confirmation of approval, even if it's closing in 6 months, 9 months, a year, 2 years, 3 years. They need to know that they're safe and they're going to be okay. And that will help them if rates do increase, they're going to be okay. They will have a rate locked in. So what Mike was saying, we do recognize the appreciated value of new construction homes. It could be, well, especially recently with the increase in the values over the last 2 years. It's even more prominent, but after 1 year, 2 years, the house prices sometimes do increase, and based on an appraised value, we do allow our customers to use that appraised value. This is for uninsured mortgages. This is not with the insurers like CMHC. So you do have to have your 20% down payment and requalify, of course. You have to be able to support that increased mortgage. And then a question that you might have is, do I have to put, like, your 20% down has hugely increased now, possibly. But it's interesting. It's almost like a refinance mixed with a purchase, because you do not have to come up with any more down payment. We are stating that the rest of the down payment is coming from the equity in the house. So very interesting that we are able to do this. And like Mike said, it might be something that someone like an investor would like to do, because it's almost like doing a refinance where they're taking funds out of the equity that's already been built up. So we're just saving you the time from having to close the mortgage and then reopen it again and refinance. So it's convenient. So I want to know how I can support you. I hope that with building these relationships, that you can count on me to know that I will take the stress of this part of the process away from you. So you can work on the real estate, the contracts that you have with them, but know that the financing is taken care of. That's what my hopes are, and that's what I'm intending. So specials, we often have specials going on, and I'm just going to pull up our current special, and I just want to show you this one. Okay, so right now our current special is we're waiving $900 in fees for switching your current mortgage over to a BMO mortgage. So this is legal fees. It could be a part of your discharge fee from your other financial institution. Those could be around $300, and the price to refinance is around $450, $500. So the costs you typically see are a little below $900, but we'll pay up to $900 in those fees right now. So that is our current special. Plus the bank has always has other offers too, with credit cards, stuff like that. But I focus on the mortgage, the mortgage aspect of it, of course. And throughout the year, they always come up with different ones, whether it's a rate special or a cashback special. At different times, it could be focusing on refinances, switches, purchases. Sometimes those cashback offers include rentals, sometimes they don't. They're always different, but we usually have something going on. So questions, I actually have a question for your team, and I'm going to go back to the first-time homebuyers. My questions are definitely learning about each one of your history, where you came from, your experience, how your office sales model. What do you do for marketing? What are the things that you guys do? Which banks and lenders do you typically work with, and why do you use them? I want to learn that so that I can learn what will make our partnership better. And from that, those are the things that I would like to learn. So do you have any questions?
I think that was a great question for maybe Folu or Sunny, because they're pretty seasoned. For some of the more seasoned ones on this call that have built pretty big businesses, have great clienteles as well. So Folu or Sunny, if you guys are able to unmute, if you guys maybe want to tackle that in terms of, what do you guys look for from mortgage specialists? Like what's going to make Angie really stand out and be special and, get a lot of phone calls and referrals? I think
Well,
that's
Yeah.
yeah.
Oh, sorry. I'll let you go first.
No, Folu, go. It's only you.
You sure?
Yeah, go for it.
Hey, Angie. Very nice to meet you. Thank you very much for coming on the call today and presenting this information. I have different ranges of clients, and what I'm actually interested in is how you work with international purchasers. As an example, I have a current client. They make most of their money in a different country. They are lawyers, but they are also residents. They're citizens of Canada, but their income is from another country, and they're looking to purchase a home. So how does BMO, how would that work with with BMO? Because what I would generally do is have maybe a mortgage broker, talk to them so that they can shop around, as opposed to me, spending time looking for the banks that would take care of that.
Okay. So are they buying a home in Canada or
Yes.
internationally? Okay. So
No,
that's,
they're buying a
that's
home in
good.
Canada. Yeah.
Okay. So they do need to buy the home in Canada. So we have leverage if anything ever happens. Yeah, it doesn't need to be in Canada. Do they pay their Canadian taxes? Do they?
Well, they do file. They do file here, but I believe I haven't seen their tax returns, but when they file, of course, they're filing that they're paying taxes in another country, right?
Mm-hmm.
So the answer is yes, they do file taxes here.
Okay, that's good. So we can use income from other countries. It does need to be translated into either English or French, if it is not already. And they may have to have at least 20% down, if not more, depending. But the fact that they do claim their taxes in Canada, and we would be able to see their income with some sort of legit papers from wherever they're earning it, are big pluses, and that you're purchasing it in Canada. Those are all things that I'm looking for. So each customer is different, but I need to see all their income, their financials, what sort of down payment do they have, where is it sitting, all those things I'd look at and try to get them approved.
Okay, and another thing that you had mentioned, which I think it's a big deal, is the capped rate. I think you have it for 3 years, right? So once a client gets pre-approved for pre-construction, you can hold that rate approval for 3 years. What if the project gets extended or doesn't
Yeah,
close in?
so 3 years is the max for CMHC, insured, default insured mortgages, but for conventional uninsured mortgages, it's actually 48 months. But we do have to take a look and reconfirm the income at 36 months. For default insured, we would have to requalify the person and reset. But if they do have at least 20% down, then it actually goes up to 4 years, but we do have to reconfirm the income.
Okay. All right. Thank you very much.
Sorry, right before Sunny goes, just to add to that, I also have quite a bit of international clients that make their money abroad, but they are citizens. And I'm not sure if Folo's experience is the same. You know, I went to school with a lot of international students that, you know, once they, you know, spend 4 to 6 years here, decided, you know, at some point they want to build a life here, you know, got their citizenship, but, you know, being international students usually means that they have, you know, greater access, you know, their parents probably do well abroad from, you know, whichever countries that are coming from. And there's just better opportunities for them. And my experience as well has been to just direct them to a broker simply because I don't even know where to start. I usually find their down payments are usually larger than 20% because usually when they file income here in Canada, it's really just to kind of keep their presence here. It's really not to really make all their claims when they do most of their filings abroad. And then it does become a challenge where either, you know, they'll need to go to a broker where it's a little bit less conventional. So I guess my question is, does BMO have maybe channels or partners that maybe not through the BMO channel, but, you know, other lenders that kind of work a little bit with more unconventional routes that could support these clients? Because we do have quite a bit within a brokerage.
Yeah, if I'm not able to get an approval for them, then the mortgage specialists at BMO, we do have a partner named, they're called Spectrum, and they're like a broker actually, because they reach out, they have their own people that they work with, and it could be due to some sort of income issue, or it could be there's something that just doesn't fit our policy. It could be a part of the property, it could be something wrong, and we can send it to them. They might not necessarily be clients, but something's not quite right. So we send it to them, and they have a lot of resources. And the hopes is that they'll put them in a 1-2 year term, or if they need a 5, so be it. And they'll bring it back to us. They'll send it back to us after the term is done, so we can try to qualify them once again. So we do have a partnership with them. And they do seem to be able to get those unconventional mortgages completed.
Okay, thank you. Sonny, you want to go ahead?
Sure. Between actually Folo and Mike, you guys answered quite a few of the topics that were top of mind for me. I was going to ask, does BMO support U.S. property purchases the same way TD or RBC does? And then I guess a follow-up to that is business owners that declare not so much income but have a lot of business income going. Would that be something BMO would take on, like yourself, or would that be to one of the Spectrum brokerage that you have? And then I guess I'll round it off with, like everybody that's here, we have our network of brokers or agents that we work with to help our clients finance. And, you know, typically if I find out my client is, you know, with TD, I'll match them with the TD broker. And if I have somebody that's with RBC, I'll match them with my RBC, and BMO vice versa. Is that the right way to do it? Or is it, you know, if they're not necessarily you're their primary bank, is it still something to look at for you guys?
Honestly, I'm not looking for someone that is from BMO. So I want I do want ideally new customers to the bank. That's what my job is, to bring new business. It does make it sometimes easier when they're already at the bank to get those customers, and that's fine. I'm grateful for every referral. But I get more, I guess. So I get $500 for a new bank account that they open if they're new to the bank. So that's a bonus that I get. And so I have a quota that I have to try and meet, and it's really focused on trying to bring new business to the bank. So I do have some good products here that I know some of the other banks don't have, and vice versa. We all have some good things and some bad things. So I hope that when something comes up, that you'll send them to me, and not just for the tricky stuff, but hopefully you'll say, hey, this person is a mortgage specialist and she's just really good at her job. She's quick, and it's not just about the bank, it's about the mortgage specialist that you're sending them to, I'm hoping. Now to answer your other two questions, for international purchases, we can't support the buying of an address in the United States. If I had a customer like that, I would ask them if they have maybe some equity they could take out of a home that they have in Canada to maybe outright purchase a home in the United States. Kind of switching that around. We do have non-resident customers that live and earn money in the United States, and they may want to buy a second property here, or something like that I have had completed before, but not having a property address. We won't support that, just because we can't, if they stop paying their mortgage, we don't have any way to go in and take it back. So yeah, we can't do that. But yeah, as far as self-employed with lower income, I've seen it a lot where their net income, they have a lot of write-offs, and their net income is lower. Now we do gross that up by 15% to somewhat support that, but a lot of times their write-offs are more than 15%, which doesn't help. If they do have money coming in to the business, they've got to claim it. They really do. Like, they have to have a good accountant and at least give them somewhat of a normal income that kind of will be enough to support the house prices that they're the mortgage that they're trying to get. But if they do have assets, we do have a super savers program. If they have more than 200,000 in assets, like investments, something that's not locked in, then we actually can use that, and that we can turn that kind of into support as income would. So that's a big plus that the bank, that's new, just over the last few years, and they've been changing it out and switching it up, trying to make it better for us. So that's one that we use a lot.
Can I just follow up on that one real quick?
Yeah.
So if I have a client with holding codes and they've got cash and holding codes, you can leverage the cash and holding codes for a mortgage or a refinance or lending against. Is that what you're saying?
If it's in the company, it has to be in their name. So yeah.
And not locked away, like not in an RRSP.
Not in a locked RRSP, no.
Okay.
And now if it's in open RRSP, then I would just take away 30% because they will be taxed once they take it out. So I can use RRSPs, just not locked ones.
Would real estate qualify as part of those assets, Angie?
No, real estate does not qualify as an asset, unfortunately.
Okay. Sunny, is it satisfactory? Answer satisfactory?
Yeah, that was great. Thank you very much.
Angie, I actually do have a question. I find that I know quite a bit of people that are either on mat leave or going on mat leave, and obviously they still have incomes that they're collecting during that period. What is that process like with BMO in terms of using a portion of that income? Do they need some kind of supporting documents to show that they're coming back to work? But they're eager to buy because obviously their family is expanding. What does that process look like with BMO in terms of using that income?
Yeah, it's a really, really good question. We have a great program for this. We use their full 100% income or salary. It would be stated on a letter from the employer stating we need their return back to work date on that letter to show that they are going to be going back to their job, and their salary would be listed on it. And that's the number that we would go with. So 100%.
That's amazing, because I find most lenders don't, either the conditions are very strict or they use, and I'm not saying most lenders, I've dealt with maybe a couple of lenders recently that we kind of ran through that challenge, and I wasn't sure if it was, I mean, my solution has always been just go to a broker, the broker will know. Because I'm not in banking, and I don't understand mortgages as much as we sell houses with mortgages tied to it. They're not products that I'm comfortable with having conversations with. But that's good to know, and thank you for sharing that as well.
Yeah, so I've been with the bank for 4 years, and before that I was in the broker world. So I did have my mortgage agent license, and I did get to see that part of the world. So I do understand it. There's perks on both sides. The grass is not always greener on the other. But I like what BMO has to offer. They've got a lot of tools to support me. So and not everything, like we can't support the property in the United States, but then there's some good, and we have that Super Savers program with the investments, and we have the good income support when customers are on maternity leave. So I do really think that we've got a good all-around package, and that I hope you don't, well, you can know that I work at BMO, but think of me as a mortgage specialist. And I'll let you know if I can't do it as quickly as I can. Most likely it's a simple question, but sometimes it takes me an application to let you know that I can't do it, and that's okay. And our turnaround time is actually very quick, which, Mike, we've spoken about before. Our underwriters are quick, usually within a day or two, they get back to us. So I'll know pretty quickly. Usually I'll know before I even send it to the underwriters that I know if I can or cannot do it, as soon as I see all the information in the application.
Okay, thank you. And I actually have another question in regarding to speed, simply because, I mean, most listings that are on the market right now will typically be gone in about 10 days. So there's a real pressure to obviously get all your ducks lined up before you go hunting. That's the best practice that I think any successful agent in this market is employing, is before they go out showing houses, they're making sure they sit down with someone like you, get all the numbers, crunch it, use what it can either use a mat leave income, can't use it. But once those offers come in, those offers usually have no finance conditions, nine times out of 10. Now, with that being said, and the turnaround time being quick on BMO's end, what if an appraisal needs to be done after the fact that this deal has gone firm, and maybe, do all your deals have appraisals? Do you guys do no appraisals? Does it depend on the area, the person, the product that's being bought? Because I find that, just from my experience, and I don't know what other people's experiences are, it's almost a coin toss whether there will be an appraisal or not. And sometimes the appraisals just come at whatever the offer price is, which I've seen a couple of times, and which I know that no real appraisal was then done. They just give us the price that we offer. So I'm not, the question really is, in terms of speed and in terms of appraisals, like, what's the expectation we should have once, that client and us, the three of us are working together in a partnership, what kind of expectations should we have going into these deals with no conditions, and then the risk of potentially an appraisal being done that could come back a little bit short?
Yeah, those are good questions. And the market has really changed. So, and we've adapted, the banks adapted, and you guys have had to adapt. So this year we saw that the appraisers were getting busier and almost to the point that they were controlling the market. So we had to, like, they were taking like 1 week, 2 weeks, 3 weeks to get an appointment for an appraisal, like over the summer. Not now, it's not as bad now, it's gotten better, but it was tough then. And then we've got these quick closing dates and we're trying to meet these, and the lawyers are screaming at us because well, the appraisals aren't done yet. And but that it's not so much like that right now. The market's kind of settled a little bit. We're back to kind of normal timelines with the appraiser picking the appraisal up usually with about a week. For if the appraisal does come in under the price, then the customer does have to come up with that amount. So it depends what the customer's situation is. If they are completely maxed out, no extra funds, it is a bit of a risk. They need to know their expectations. We need to know, like, can you get help from family? Do they have extra assets? Because we don't want them to get into trouble. And as far as how often we need to do appraisals for purchases, if it's conventional, so at least 20% down, then it's every time. If it's default insured, then we don't do appraisals on the property. Unless it's a private sale, then we always do appraisals if it's a private sale. The default insurers will look at the MLS listing and they'll be looking for keywords like fixer upper or buyer beware or something like that. That might be a red flag for them. But we don't typically see appraisals really ever on default insured purchases. For conventional, we do see them. It's changed. It didn't used to be this way, but with the values increasing so much, it is now. For refinances, we have kind of an automated system that if it's within guidelines, we do kind of an auto approval of the property. So we don't always need them for refinances, but that's not so much in purchases. Purchases we do.
So just to clarify, if they're putting less than 20% down and it's insured by CMHC, there's no appraisals being done.
That's correct. Yeah.
Wow.
Yeah.
That is shocking. But
My thoughts exactly.
That is shocking. That's still marinating with me as you're saying it. So okay, that's now a follow-up to that. What I've actually advised for some clients is to have a longer close, so that way if we need to, we can get it reappraised. So if the closing is 90 days, usually the market changes week over week. So I'm 100% sure by the time we are near that closing date, we should be able to get another appraisal, and that would help them to not have to come up with extra money out of their pocket. Is that strategy, if let's say, again, like you and I are going to be working together, we have a client that's mutual, is that a strategy that in my head it works, but does it actually work?
No, because the underwriters, once they see an appraisal that comes back with lower value, they say we can always fight the appraisals by, get the realtor to send us 3 of their listings that they think the market would, that's recently sold. But most of the time the appraisers, they do have access to MLS. I've fought a few, but I've never been able to win. The credit officer, they'll see that price And I don't think it would change their mind doing another one unless I fought the appraisal and won. Doing another one, they would probably go with the lower amount just to cover themselves. Yeah, you'd probably have to go to another bank, I'd say. I hate to say that, but it'd be over for me unless they could come up with that extra amount.
And the reason why I say that, I mean, I've been fighting appraisals for 10 years, and there was a point where I knew before the appraisal was even done if it was going to be low, and I would call the bank and say, can you send another appraiser? And they'll say, but we don't have the report yet. I said, and I'll let them know, look, just believe me, this is gonna come back short, and I know why it's gonna come back short, and could you send another appraiser? So I guess the main thing in what I've learned for the last 10 years in terms of buying real estate and, you know, servicing clients is, you know, having someone to fight for you, being the agent, you know, your accountant, and your mortgage broker. Those three individuals are key. So, you know, that's really what I've found to be, you know, successful for me, and also successful for my clients, is really being, but also like within a certain framework. Like we're not just pulling numbers out of thin air. Like I can support the numbers. I just need someone to kind of just work with me, go to bat with me, you know, on these numbers. And if it's, you know, something like, can we get another appraisal in 60 to 90 days? Or, you know, I know this appraisal is short because there's no comparables. Sometimes there's just no comparables that they could actually match it up with. So they're going to go with what someone, you know, like if it's a direct comparable analysis, you know, it's easy for a condo because there's tons of listings, but you're in the country, for example. So, you know, it's a little more challenging to find that comparable that matches yours. So I think just finding right individuals, being, you know, us as realtors, mortgage specialists, you know, does go a long way in terms of, you know, giving everybody a successful outcome, which I read in your first slide, which is, you know, all our common goals. So.
Yeah, so we do have two different companies that we work with, NAS and Solidify. So there has to be appraisers in your area from both for me to be able to cancel it and order the other one. So if you're at the appraisal, talking with the appraiser, and you do get that idea, I can cancel it. They may charge because they've already gone out there, but I can cancel it and request the other company to go out, and maybe we would save it. Yeah, it's tough most times, whatever the purchase price is, because they do ask me to upload the purchase agreement. Usually they just do whatever the purchase agreement is, usually.
Good.
But sometimes there's those odd ones that, yeah, first they come in a little bit lower than we expect. And yeah, it gets us into trouble, especially in this market. And if you have like all the right things there, if they're completely maxed out, they have no other assets or help to reach out to, it could cause problems.
And you know what? And just for everybody else on the call, I mean, I've had moments where to save the deal, I'll have to bite the bullet on some commissions, because if it's short 50,000, and as you're saying, Angie, and that person is maxed out, and you know, there's a risk of losing this, and you know, going back into the market again, just for most people, just doesn't make sense, because the market in the GTA, at least, it moves week to week. Like I'm looking at listings this week, and I already know there's going to be $20,000 to $30,000 to $50,000 on top of it next week. So, you know, be careful when you're, especially, you know, going over asking, really doing your analysis with, you know, with the clients. I'm doing one right now, and I'm saying, look, we could go anywhere from 780,000 to 840,000. Like the range is so big, simply because of how quickly things are moving and all the other stuff attached to it. But do know that to sometimes save a deal, it might mean, hey, you know what? You take maybe a point off, and that's the only way to really rectify this, because there is risks in this kind of a market. Because I saw it in 2017 when everything was high, and then in the span of 6 months, everything was low. Nobody was doing appraisals, and then everybody started doing appraisals. It was so bizarre. So just know that there's that kind of a risk, and just be very careful in terms of how much over you're pushing your clients, and make sure they have either the support of their parents, who probably have a lot of equity in their homes and they're ready. You might need to come up for an extra 30 to 50,000 and so forth. So just a cautionary tale, because I mean, we do represent a lot of buyers, because obviously there's not a lot of people listing properties today. So there's a lot of people looking to buy properties. So we have more of our clientels typically tend to be buyers, and which simply means that, we're going to be most likely 9 out of 10 times going into bidding wars with those individuals. I have one final question, and then if anybody else has any questions, so I know right now Angie, we're working to get that 36-month program set up for the clients. So this is probably a good case study where we'll probably go through all 3 scenarios. Client bought a pre-construction, will be ready in 3 years, which we know that's not true. That, we're working to get a pre-approval set up for them. They're submitting their income and all their docs. Most likely by the time it's ready, we're gonna call BMO back and say, hey, we bought this for $550, it's worth $650. Can we qualify to get it closed on $650? Clients already put in 20% down. Does that hinder their opportunity to do other stuff with BMO, given that they already have a pre-approval that's pretty much locked in? But it might not be ready for 3 years, because in that process, a lot of things can happen in pre-construction. Project can get canceled, builder can belly up. I've seen builders convert units that they sold to clients. They've converted it to rentals on the very last day of their agreement that allows them to do. Doesn't happen a lot, but I've seen it happen. Things change in people's lives in that period. They get married, they have kids, they have to relocate, start a new job. Maybe they have to go to London, Ontario. Now they got to buy a house, closer to you. Will they still be able to make another purchase, given that this pre-approval is set and locked in?
So it's all based on their income. So can they carry both? Us knowing, the bank knowing that they're buying this house, that would take away that portion of their qualifying, unless they were comfortable with canceling it. If they know for sure that this is going to go past 3 years, then we might as well cancel it anyway. If they're comfortable with that, then we can set them up for something else when we start pre-approved for it. And then when the time comes for that to actually close, we can go back to it. So it all depends what they're comfortable with doing. But they can only qualify what their income allows. But we can cancel it if they know it's going to go past it and we're going to end up canceling it anyway. That would be the only way that we could do both on like that income, if it covers only the one.
Gotcha. Okay. Thank you very much. Anybody else have any questions? Sorry about that. Okay. Everybody's okay? Angie, I guess I'll leave you with final words.
Oh, well, thank you so much for having me. I look forward to hopefully meeting all of you and working with you, hopefully. And if you need my contact details, you can reach me, text, phone call, email. I'm pretty easy to reach. And if you have any other questions, please don't hesitate to reach out.
Okay, thank you very much. Thanks for being
Thank you,
here with
Angie.
us. And for the rest of the team, if you guys can stick around for about 10 minutes, and then we will wrap it up. Thanks, Angie.
Thank you, Anne.
Okay, thank you guys. Bye.
Okay, guys, we're gonna take about 10 minutes. How was that? Was that helpful? Like, do you guys want to see more lenders, bankers with different options, different programs? Because I mean, every bank, as we could see, has pros and cons, limitations, what they can do, what they can't do. Is this type of training with different lenders, what's the feedback? Is it helpful? You want to see more of it? Or,
I think it's helpful. I didn't know about the CMHC insured mortgages and then no approval, the no appraisal.
appraisals. I know that's crazy, huh? That's
When you brought that up, I was, wow. Okay.
that is
Hey,
crazy.
Mike, it was very helpful. See if you can find someone, say, hey, doesn't matter what client you have, I'll get it done. See if you can get that happening.
Nobody will ever say that. Nobody will ever say that. And if they tell you that, they're lying. I will never do, or they can get you in some trouble. So be careful with over everybody.
Careful what you wish for, right?
Exactly.
Maybe,
Sorry?
maybe we could get in like a mortgage broker who's good at creative financing. And she's with BMO, so I know she's kind of governed by their policies.
Yeah.
If you have someone else who's maybe a little bit more creative, then
I mean, we had Paul come on a few months ago, who's a mortgage broker that I work with, is also servicing. I mean, I like to sprinkle across brokers, banks, and see, who delivers and what that experience looks like for the clientele. So I'm presently working with Angie, Paul, who was a mortgage broker who was on here a little while back. Everything I find is just case to case. Everything is case to case. Every person is case to case, because all our clients are so different in terms of how they make their money, how they report, where they live, and then where they file. And everything is just so case to case. But I think, having a BMO, an RBC, couple of brokers all come in, it kind of allows you to, because when I didn't know about the mat leave, the mat leave thing was a huge thing to me, because most of the banks that I've spoken to, once you're on mat leave, you can't use 100% of your income. So, because to them, it's like, well, you're not making that money, so why would I use that as income? But then BMO says, we'll use 100% of it, you just need a letter. So I think having the difference in options and knowing what the strengths and the offerings are. Angie's great, she's very responsive. Like, if I send her an email, I'm getting a response back usually within an hour to two max. She has a file on her desk. She has a couple of files on her desk for me that we're currently working. And what I was shocked about was that they were able to close on appraised values, which is a big deal. If you're buying, which a lot of people are, and a lot of our clients are, if you're buying new construction, and you're putting 20% down, by the time closing comes, you probably have another 50,000 in closing costs that you probably didn't even anticipate. Land transfer, development charges, utility meter setup, Tarion, lawyer, those are the basics. That's if everything kind of just aligns and works out a plan. But if BMO can say, hey, you know what? Well, you bought this thing for 500,000, it's now worth 600,000. We'll cut you a check for 100,000 if you qualify for it. And then you use that towards your closing costs, and you have no further funds that you have to bring out of pocket. That is a big deal. So that was when when I saw that they had a diversity of products, that they weren't just, your conventional first-time home buyer with dual income and perfect credit. And they were putting more and more products available. That's part of the reason why I felt BMO will be a good contact, and Angie will be a good contact to have on today's call. But yes, you know, we will have a mortgage broker on at some point. If you guys have great ones that you work with, you know, I've another really good one. I can bring him on because he's an investor, owns a lot of properties, so he knows how to get a little bit more creative. I'm not sure if he'll share it with all of you on a call, but on a one-on-one, he will, you know, he will definitely break it down based on everybody's profile, whether it be your personal profiles or your client's profiles. Any other comments, questions in that regard?
Yeah. Hi, Mike. It's Christiana. I wanted to ask if you can maybe send us some of the mortgage brokers that can get the job done at a timely basis. If you can get us that contact, that would be great.
Everybody wants those mortgage to get the job.
We
Okay.
can maybe
Right?
make like a event, like sort of like a mortgage broker list, kind of like a vendor list of
Yeah.
people that you guys can call. So
Yeah, yeah.
that was actually a great idea. So if everybody has like their preferred mortgage person, if you just shoot me an email of their contact, I'll put together like a quick spreadsheet.
Okay, that'd be
I don't-
great. So I'll send you like the top 3 that I work with.
Yeah.
2 brokers. Angie, everyone has their contact, but I'll add that to it.
And then I'll put it in like the agent resources for everyone.
Mm.
Yeah.
Okay, perfect.
But
So
I'll
Thank you.
caution, just from my experience, is that I match my brokers to my clients because not every client is the same and not every broker is the same.
exactly.
So just going off a list is not that. You really need to get to know the brokers. You need to know how they work, how they represent you, and how they connect your clients. Because if they do an awful job, no matter what, if it's a broker's fault, it's going to come right back on you. So, you know, you've got to really trust who you're doing the referral to.
That's a great point, Sonny. And what we can do is we can have them get on these calls first. You know, if you guys have a great experiences with them, let's have them get on this call. If it's a lawyer that you guys have worked with and, you know, have had great experiences with, let's get them on this call so we kind of get a feel of their style. You know, types of products I think are very important in terms of knowing how to match clients, knowing what the brokers and the lenders have in terms of offerings. Because now I know, if I know anybody on mat leave, I know where I'm sending them. You know, I'm sending them to BMO. BMO can match the rate, usually for most banks, right, within a couple of basis points. And they can use most of the income as well. So I think we also need to have, I need to find a good accountant. There was one that we had come and do a presentation for Dream Maker a while back.
Yeah, that guy was good.
AZ accountant. I haven't been able to get in contact with them. So if anybody still has his contact, I've reached out to him during the pandemic. I'm not sure. I know he had opened up an office downtown. Pandemic happened, and I'm not sure what has happened, and we lost communication. So if anybody still is in contact with AZ accountant, do let me know, please. So, and any other questions? I just want to talk real quickly for 5 minutes. Okay, perfect. So I wanted to talk about our.
Hey, I actually have a question though. If
Jordan,
nobody else has a
go
question.
ahead.
I have hey, just hope everyone's doing well for the new year. I haven't spoken to anybody in a while. I have a client who's looking at a rental property in Hamilton, in Windsor. And there's a interesting situation with the current tenants. They're on verbal contracts.
Contracts?
Sorry?
Is that what you said? Did you say verbal contracts?
Yeah, verbal contracts. So there's no written contract.
Okay.
There's actually a subtenant in there as well, who
Okay.
the owner wasn't aware of them taking occupancy for the product of the property.
Okay.
So assuming that they've been in there past the 1 year mark, and they're on a 30-day, they're on a monthly tenancy. My client is looking at actually getting the property for a flip, right?
So your client is the buyer.
Yeah, my client's the buyer. And would the eviction request be written into the offer, or would that be given directly to the tenants? Like, how would we go about that?
You're the seller, so you need to communicate with the agent of the seller.
Mhm.
They need to have an N11 form signed and filed. needs to be signed and it needs to be filed. The
Okay.
easiest way to get rid of tenants is to pay the tenants the last month rent, which they can use as a down payment for their first month rent.
Mhm.
Now, I believe in the N11, they're actually entitled to the last month rent with the new rules.
Okay.
But most people don't read the N11s. So I typically use it as, hey, you know what? I'll pay you 1 month to leave. That's how I usually state it. It's their
Okay.
right to get that 1 month to leave, but they usually don't know that. And if I need to juice it up a little bit, just pay for their moving costs. Here's $500. That will save you so much time and headache.
Yeah.
Because you want to write in your deal that you are going to take vacant possession.
Mhm.
It states so in the OREA forms, but you just want to make it clear in the schedules that you want to take this property and you want to take it with vacant possession.
Okay.
That's very
Okay. Sounds good. And one more question. For the clauses, my client is really insistent on using due diligence as a clause, as opposed to writing in the financing clause and the inspection clause. So she wants to use, due diligence as this broad term so that she can kind of do whatever she wants to do. I was suggesting that she write in financing and inspection, but she doesn't want to do that given the market situation and that, there's going to be like 1 million offers on this property. So is that okay to write in due diligence in place of financing and inspection?
I mean, if due diligence is not financing and due diligence is not.
And that's what I told her. I told her financing is a different thing, but I didn't think it was correct, but I just wanted to double check.
Well, due diligence benefits her because that can mean anything. If I'm a seller and someone gave me a due diligence offer, especially with 1 million offers coming in, why would I even look at that?
Yeah, exactly.
Right.
Exactly.
So you have to prepare your client to know that most likely somebody is going to assume the tenant and then deal with the tenant afterwards. Because legally you can't kick out a tenant unless there's an agreement of purchase and sale in place.
Yeah.
Or you're moving in or you are moving in or a family member is moving in. Those are the only 2 scenarios where you can kick a tenant out.
Yeah.
Other than that, you can't kick a tenant out regardless of any other scenarios. So if in an aggressive market, I actually like looking at tenanted properties because I know how to manage tenants.
Yeah.
As a professional and as a landlord, I know how to manage tenants. So for a lot of people, it will scare them because what if the tenant doesn't leave? That's a real thing. What if the tenant doesn't leave and he holds the house as hostage? How do you deal with that?
Yeah, exactly.
Right. So there'll be somebody who is probably an investor and willing to assume the tenant. But for your sake, you just need to make sure there's vacant possession. And if you want to do a due diligence, do the due diligence before the offer date. So the offer date is on Tuesday, let's say.
Yeah.
Showing for an
No,
hour.
she wants to do diligence 5 days after the offer.
Well, she's not a buyer, Jordan. That's what that sounds like.
Yeah.
It sounds like she's not a buyer. And the quicker you figure out that she's not a buyer, the quicker like you can move on from her.
Yeah,
Or
I've known that the whole situation. I've known that it's not the most ideal situation. I actually got the listing agent to show the property because I just felt like it was a waste of time. But yeah, it's not a strong deposit. It's not a competitive offer. It's it's just not a good situation. And she's trying to add 1 million clauses in there when a lot of people are going to come 100,000 plus over asking. So I know she may not get the property, but I just wanted to figure out the nuances before we went in there.
Well, I mean, first the nuance is she's not a buyer. So, as soon as you establish that she's not a buyer, and which is what your spider sense told you, and you didn't even take her to go do the showing, you had the listing agent do the showing, and you risk an extra 1% deduction off your commission because you understood that she's not a buyer.
Yeah.
So
sometimes the best business is the business you don't do.
Exactly.
Okay, so you can put the offer with a due diligence clause, and if the seller takes it, I mean, pat on your back, right? But I mean, it's a waste of time and energy. That's what I feel, just from the amount of information that you've
Yeah.
shared. So,
Okay, appreciate it.
okay,
I do have a question.
Yeah.
Kind of to piggyback off what Jordan was saying and what you were saying, Mike, if you assume the tenants,
yes,
you buy the property, how then are you able to evict them?
most likely you have to pay them, or
Okay.
you go through the process of eviction with the landlord and tenant board. You produce your agreement of purchase and sale. You're a purchaser. Here's the proof. I mean, that's legwork that the seller should be doing and the seller's agent, but some sellers and some sellers agents are just not competent. They don't know how to, they just don't know how to deal with it. So you have to take on a lot more work than you would need to. The seller could be, the agent could be related to the seller. It's his daughter, and she just got a license and she's listed, which is a very common thing, right? So, you might need to coach the agent. I think that's what I would do first. I would coach this, and I do that a lot, especially, Foley, you do assignment sales a lot. And I find, and Foley, you can correct me if I'm wrong, I have to coach the seller's agent on how to prepare and navigate through the assignment process, because I know they just don't know how to do it. Right. So sometimes you have to coach the seller's agent through the process. And I sometimes have to do that quite a bit, depending on how the deal is structured, if there's complications like a tenant, and so forth.
Because I was looking at this yesterday for a client, and the N12 actually says notice to end your tenancy because the landlord, purchaser, or a family member requires the unit.
Correct.
If I assume the tenant, does this now void me? Am I not allowed to use the N12? Do you know what I mean?
Well, what should happen is once it's sold and you have a firm agreement,
Mhm.
the seller agent should then, and the landlord should then file in the landlord and tenant board the eviction notice of the N12. And they can produce the agreement of purchase and sell to justify and to show proof that this was actually purchased. So at least that way the eviction process can begin before you take possession.
Right.
Now,
I just didn't.
I've had before, I've issued an N12. So I represented the seller. I issued an N12. My closing was in 60 days and my hearing was in 90 days.
Right.
Okay. So my closing was in 60 days, but my hearing was in 90 days. And I had to pay the tenant to leave. I used the same process I just mentioned. Hey, you know what? What if I give you 1 month and then we sign an N11, which is an agreement for them to leave, and we get you out of here within 60 days? How does that sound? Okay, that works. And that's how, because you could file and be in court, but I don't know how backed up the landlord and tenant board in Toronto are and other regions that you're working in. But those are things that you're gonna have to, that you sometimes will have to deal with. Preferred as a seller, get rid of the tenant before you put up the listing, because showing a house or a property with a tenant, it's always gonna sell for less. You have to confirm showings. I did showings last summer where tenants wouldn't allow us in rooms, so we had to just go by the pictures and the dimensions, because this room is rented, and you have to confirm with each tenant before you can, so you can't even properly show the property. So the best practice is, if you can, get rid of the tenant first, pay the tenant the 1 month to leave, because they're thinking of their cost. But if their last month, they've already paid for their last month, so they're getting 60 days for free. That is a big deal to most renters. So use that, leverage that. You can have 60 days where you're not paying anything, and you can use it to set yourself up to, to set up your next move and your next wave. But yes, the seller should be handling the eviction process, not the buyer and not the buyer agent. But sometimes you might need to step in and you might need to do so.
Okay, sounds good. Thanks.
Okay, no problem. Any other questions? Not just related to the tenancies, but just in general? Okay, perfect. So I wanted to talk a little bit about our, hasn't come about a lot, but it's come about a few times, so I feel it's important to address. And that is, for lack of a better word, freebies. Freebies being that, you can do a deal within a brokerage and you don't charge commissions, or the brokerage doesn't charge commissions for that deal. The way it's structured right now is you can do it for your primary residence. Now, what we're going to go by as your primary residence is what we have on file as your primary residence. However you file with CRA, what your primary residence is, it's not the brokerage's concern, and it's not our business. Like, we don't care. However, we will not be applying those freebies to your investment properties because you don't want to pay commissions on that purchase. That and I think that's, for most people, it goes without saying, but once in a while I do get the freebie conversation, so I'm just going to address it really, really quickly. We have a $15,000 cap, and one agent did last year was they wrote us a check for $15,000, and all their deals were essentially freebies. So if you can forecast and you know your business, you can project what you're going to do, you can just write a check for Dream Maker today, January 13th, for $15,000, and you can do whatever you want with your business. It's not our concern. It's not our, and it's actually a better strategy as well. For those that are capable and are able to forecast and so forth. The second thing that I would recommend, which is what I do, is for all my freebies, I cap first. I do my $15,000 that I have to do for the brokerage. And then I can now sell my parents, my mom's house, my dad's house, my cousin's house, my sister's house, my cousin's house, and those are all freebies. Okay, so the quicker you hit that, and that's part of the incentive of it, the quicker you get that 15,000 done, every deal that comes on board after is a freebie. So you can structure it, position it, kickbacks. I mean, me personally, I don't do freebies for anybody, not even my parents. I charge them the full pop. I do because I'm in business and I have a family, I have a mortgage, I have, I don't do freebies. I don't, like, that's never been, I've never had that issue, but I find that but I also understand, if you have a client who's buying 6 properties from you a year, I get it. You have to kind of kick back and, build a business with them in a way that makes sense to them. Because, I mean, they're putting a lot of business and a lot of food on your table and your family's table. The best way that I believe you should be doing that is, we have a minimum charge for the brokerage. So what you could do is, for those clients, like I have clients that we do a lot of business. I don't do any freebies for them either, no matter how much business we do. But if I'm reducing my commissions, I don't reduce the portion that goes to Dream Maker. So what that means is, if let's say you're on a 80-20 split, it's a $10,000 commission. If you charge a full pop, $2,000 goes to Dream Maker, $8,000 go to you. Your $8,000 could be the freebie, but Dream Maker will still charge that $2,000 and invoice it to the client, as well as the co-op, obviously, because there's another 2.5% that needs to go out to the. There's another 2.5% that needs to go out to the co-op. So the total commission will be the 2.5 to the co-op. So let's assume the co-op is also 10,000. The co-op is 10,000 plus 2,000. We will invoice the client a total of 12,000 plus HST. So that's another way for you to structure those freebies. So that way the client is still winning by a lot, and you're still, we're still operating a business. Sometimes also, doesn't happen often enough, but it doesn't happen a lot, I'm sorry, but it does happen sometimes where there's an opportunity to roll your commissions into purchase prices. If you're buying pre-cons, I used to do that in the past. Don't pay me, roll, my commissions for these 3 to 5 deals. Can you roll it into the purchase price and give me a deduction on the purchase price? Now, obviously, the builder will consult with the brokerage to see how we want to slice it up. And what we could do is, again, based on your split and your structure, we do know that, let's say again you're on an 80-20. Let's say the commission is 20,000. We could invoice that builder for the 20%. And then they can bake in the form of a credit, your commissions off that purchase price. Does that make sense? So the total invoice that we will invoice the builder will be just the net of what your split is, not the total commissions, because there's probably tax implications. So let's say, you sell 4 pre-constructions, your total commission is 80,000. And you want 80,000 deduction off the purchase price. The builder's going to reach out to us, and they're going to say, hey, could you send a letter to confirm that this can be done, yada, yada, yada. Well, it can't be done, but what we can do is we can do 80,000 and take 80% of that, which is 64,000, and we can apply the 64,000 deduction of the purchase price, so that way, your strategy of however you want to maneuver and play with your income, because you don't want to show income, yada, yada, yada. We could do that and then invoice them the balance, which is 16,000. So on final closing or whenever commissions are due, we're going to collect 16,000. Now, if you happen to cap in that year, or when those commissions are payable, obviously if you're capping in that year, then we credit you back the 16,000. Does that make sense? Is that, I know I kind of, there's some technicalities, some maneuvering. And again, this only applies to a very, very small number of people. But I thought it was very important to just address how the compensation plan is structured, why it's structured as well. It's really structured for you guys to be able to maximize, your resources, your time, your energy, and to make a lot of money and to keep a lot of money in your pockets. But there are some areas where, because of, there are incentives and opportunities where, you can apply, some credits from your primary residence, and also the way maybe you build your business, or you've built your business in the past. There's perks and incentives and business structures that you set up with other parties that we're not privy to, and we don't want it to hinder your business. But we just want to make sure that you're using the best practices moving forward in terms of how you build your business, and how you apply those perks that that are available to you as well. And that's the only conversation that I wanted to quickly address and just quickly make mention. Are there any questions in regards to those caps and those freebies? No? Okay, perfect. So next month, we're going to talk about bidding wars, best practices from a seller perspective and from a buyer perspective. So if you have a client, obviously you have a freehold product, you are 9.99 times out of 10 going to be setting it up with an offer date. So we're going to discuss the best practices of how to do so. And there's things that you guys maybe come across that you probably don't understand why it's done, but you maybe just copy and paste. But there's a reason behind certain strategies that listing agents use. Like, should you have a preemptive offer date, or should you have no preemptive offers? Like those are very important details for you to understand why agents do it, why it's important to do it, when it's important to do it, from a seller perspective. From a buyer perspective, if you're bringing clients, as Angie and some other individuals have mentioned today, if you're bringing clients to buy properties that have offer dates, which most of you probably are. Jordan, obviously you're going into one this week. I'm going into one on Tuesday. How to best prepare for that? What kind of expectations do you set for the clients? Conversations you should be having with the listing agent prior to that offer date. Because if 30 offers are coming, they're not gonna remember. Like, you want to stand out, and you want to make sure that they know your name, they know your voice, they know your email address. Because seller agents are emotional, and they will devour, they will give information that they shouldn't give once they feel comfortable enough with you. And there's ways you can ask certain questions so that way you're not getting an unfair advantage. But there's ways to ask it, and there's ways to position certain questions to listing agents so that way you can just improve your chances of success. Has anybody been and won an offer on a bidding war in the last 60 days? Been a part of one and won one in the last 60 days? As a buyer, representing buyers. Obviously, as a seller, you won, but representing buyers.
Yeah, I think Jason and I did one just before the year end, one or two.
Okay. And what was, okay, so Sonny, maybe we can talk offline, and then I'll have you guys kind of share some of your best practices and what.
Is that a good plan?
Okay, so Sonny and Jason will be our co-presenters on next month.
I like how that just happened.
Looking forward to it. I know, I just baited you into that. You didn't even notice. You see?
Yeah.
Ways to position certain
You
questions
got me right in.
to get the results that you want. Okay, guys. So
Happy if I can help.
Looking forward to it. We'll send those details out early. Oh, and lastly, we are going to be we're going to have a monthly call, most likely the last Thursday of the month. And that call is going to be for those agents that are capping and doing better. It's not going to be a formal kind of setting. It's just going to be raw. What are you doing? Prospecting. How many numbers are you doing? How many doors are you knocking on? How are you marketing? Where are you marketing? What's your success? And it's going to be a pool of, the best of the best. And it's going to be an opportunity for me to learn and everybody else involved to learn. So for those of you guys that want to be a part of that group, get in touch with me, and let's talk and let's strategize how to get you guys to be a part of that, and how to, get you guys producing, getting those numbers up, and then looking forward to, and I think we're gonna have our first one with about 8 people. So I want to get our next one. If we can grow it month over month, that'll be great.
Sorry,
Okay.
Mike, it's like a mastermind group. Is
Correct.
that
So it's gonna be a mastermind group for the agents that are capping
Not
or doing
producing.
better,
Yeah.
that are performing, and it's just really going to be just a way for us to just bounce ideas, collaborate, share best practices. I haven't decided yet if we're going to record it or not,
Mhm.
depending on how raw it gets. Certain things we don't want to. But yeah, just work hard. Let us know what we can do to support you so that you can be a part of that.
Okay.
And we want more women to be in that. Right now, it's all men. So
Maybe I'll just start a women's mastermind group.
That's okay. That's okay. I am not opposed. Okay, so so look out for that, details for that. And also there'll be an email going out shortly to recognize the performances of a few individuals, our rookie of the year, our top agent of the year, and our high volume producers of the year as well. So that email and congratulatory will be going out. We do have some gifts and some swags for those individuals as well that they can pick up at the office. So 2022 is here, guys. It is going to be a crazy year for real estate if you guys don't know that yet. It's going to be a crazy year. It's going to be a busy year. Get your individuals pre-approved, your investors that have tenants or are looking to sell, start having those conversations. For your clients that need to level up and move up, your move up buyers, this is the time. Interest rates are projected to go up 3 basis points this year, which is not a big deal, but for the emotional buyers and sellers, it is a big deal. So use that to start having those conversations, especially if people have owned real estate for at least 3 years and their rates are locked in, they can probably get a much bigger, much nicer house for the same kind of payments that they're doing. So this is the time for them to break those mortgages, to move up, to start giving those notices to the tenants. So that way those units can be empty. So we can have vacant showings, get professional photos, virtual tours done, and proper marketing, so that way you can start your year off right. So that way, your last quarter, you've capped, and you're just worried that everything that comes in, those are worried about how you're going to use that to pay next year's taxes, and and just like set yourself up for the following year and so forth. So if you do need to reach out to me, if you do want to sit down, you want to look closely at your numbers of what you did last year, and projections and things that you could do to improve, reach out to me. We will send you out those stats. We have a ton of stats in our system. So let's sit down. And if you want to move up, from your split ratio that you're on, this is the time for us to start having those conversations, so that way we can help you guys build your businesses. I think that's it. Natasha, you have anything you want to add? Any updates? Team photos?
Yeah, it'd be great to continue getting some team photos from you guys, because there's still a lot of people missing from the website. We do have the new website up. Obviously, we wanted something a little cleaner to just show the brokerage off a little bit more, but it is still a work in progress. So if you guys have any tips or things you'd like to see on the site, feel free to let me know. There is a mortgage calculator on there, so that might be helpful for you guys. So if you go into the agent resources section, there's a lot of stuff you can use and easily find to help support your business. And I'll also update every monthly training to the site, and you guys can find the past training sessions that are recorded on the website as well. So that should just be a little easier than having to go all over the place. Even like your Google Drive with all the pre-constructions and paperwork, all that stuff is also accessible through the website. So again, if all else fails, just go to dreammakerrealty.ca under agent resources, and you should be able to find what you're looking for. As for any other updates, just stay on top of your paperwork. I know Shubham's doing a great job at, just trying to clarify with you guys and page you guys for anything that's missing. But paperwork still seems to be quite an issue in the office with some of you. If you are unsure of what you need for a particular process or deal, again, just feel free to contact me and I can help you work through that. Maybe next month we can do a quick 15 minutes just going through paperwork again and what you all need and where it needs to be signed and all of that. But that is still an issue. And it's the new year. So with that, we will, a lot of you, I think, post-date your expense checks. I believe that Senior would love to get those monthly expenses from you guys. So if that's still the system you'd like to just drop off some post-dated checks, now is the time to do that for the monthly fee. What else do I got? That's it. That's all I know of right now. If anything else comes up, I will definitely WhatsApp you or contact you directly. All right.
Good. Thanks, Sasha. Thanks,
Thanks,
everyone.
guys.
All right. See you. Have a good day.
Soon. All right.
Bye.